Learning objectives. Outline the different features and benefits of financial products and services. Explain the range of investment and insurance services. Outline regulatory structure regarding to licensing and sales of financial products. Explain the use of InsurTech. Lecture outline. Introduction. Types of bank services for the personal market. Deposit services, plastic card services, payments or fund transfer services, consumer credit services.
Kindly look at the diagrams here. This is a fund flow model where money flows in different directions. The areas, they have different areas, the overseas sectors, business sectors, government sectors, and personal sectors. Money are flowing through the banks or financial intermediaries. For us, we'll be focusing on the personal sector. The full banks offer a wide range of activities. Accepting deposits from current account, saving account, fixed deposit account. You also can grant loans, housing loan, renovation loans, bridging loans, and many more. What can a qualified full bank do? The operations they can have total 25 locations and share ATMs among the banks themselves, the qualifying full banks. They can freely relocate their sub branches, offer supplementary retirement scheme, and CPF investment scheme accounts. Deposit services. It is a cheap source of funding for the banks, and the banks pay interest on the balance. At the same time, the banks will make use of this opportunity to market their value-added services to the customers, such as overdraft, OD, credit cards. For the saving accounts, it attracts customers to the banks. It basically attracts funds from the customer to the banks. Basically, the customer put deposit money into the banks, and it can operate through saving passbook, statement of accounts. Nowadays, we are using more of e-statements to go green, and we can operate by individuals, whether it's joint or single or joint, and you have to be at least more than 12 years old. Okay, if you're younger than 12 years old, you need an adult, okay, to open an account with you.
Current account. Current account issues a checkbook, and usually is statement based. It does not earn any interest. It can be opened by a single individual as a personal account. 2 or more person can have a joint account, or under business or organization. Hybrid account has both current and saving account functions. It issues checkbooks and also grants easy access to funds. The deposit can earn interest income. Fixed deposit, also known as term or time deposits. Fund placed for a fixed period. It could be from 1 month to 36 months and provides at a fixed interest rate. Placement is evident by the certificate of deposit or advice. Plastic card services. One of the common plastic card services are offered via credit cards. It's a convenient way of payment and widely accepted at retail outlets. It's a method of payment. I have two popular method of payments. One is Visa and MasterCard. Banks are basically the credit or card issuer, and it's billed monthly for purchases and a fixed number of interest-free days before payment. We look at this diagram. For example, you as a buyer go to shop at Isetan, and Isetan is basically the merchant. You shop with a DBS credit card, and when you shop at you use the DBS credit card, okay, the card and the sales data are captured by UOB Bank because at the terminal at Isetan, let's say in this situation, Isetan use the terminal from UOB. This basically the credit card terminal is issued by UOB, and UOB will transmit the data to DBS because the credit card belongs to DBS. And the fund will be transferred. Okay, basically the money, they transfer the money. DBS will transfer the money to Isetan through UOB because the terminal is UOB, and DBS will send you a monthly bill, credit card bill. And card holders is billed on monthly basis. It enjoys credit free a period of free credit, okay, or rather interest free, okay, period, probably about from 20 to 25 days. It depends on the banks that you are with. The credit cards allows the user to pay a fixed percentage or amount, whichever is higher. Until fully paid, the amount used will incur interest charge at about 24% per annum. So it depends from banks to banks. The interest rate depends from banks to the different cards you have. I mean, the cards that you have, the credit cards you use, and also depends if there's any promotion. And basically, there's many factors that can influence the interest rate charge. This beneficials, it benefits the retailers because it guaranteed payment. It provides guaranteed payment with signed vouchers and reduce cash handling because the retailer don't need to take the cash and deposit at the bank. Straight away, the money will deposit into the bank's account. It also improves sales because based on statistics, it does the usage of credit card encourage the user to buy things more readily. Let's look at debit cards. Some of the debit cards requires PIN. Some of the debit cards are PIN number based. Basically, it's a personal identification number, which you are familiar with. Here, there's no credit standard, so basically means that there's no loan, and the money is basically the payment is straight away deduct from your bank account. Of course, the debit card can be used through shared ATM networks. For example, OCBC and UOB share their ATM machine. So basically, your UOB card can use an OCBC ATM machine. Some of the cards, there are some signature-based debit card. So instead of using PIN, you can sign. The user can sign. So, but still, a PIN is usually issued. This appeals to teens or young working adults who want to have credit cards, but it's not eligible to have a credit card because the minimum there's a minimum requirements for credit card is 30,000. So if someone, I mean anyone who wants to have a credit card but cannot have one, this is the next best thing. Cashier's order or CO, or known as the banker's check. This is basically a check issued by the banks in Sing dollar, issued by the banks or on behalf of the customer. It's a more preferred form of check payment, especially for very large amount. This is how a cashier's order look like. Okay, this cashier's order issued by the best bank paid to St. Joseph Institute right? Okay, and the amount is 7,388. Okay, and signed by the bank's officer. Take note, this is in local currency. Demand draft. This for payment in foreign country. Take note, this for foreign country. So basically, not in Singapore but other country, and usually in the foreign currency too. And the payment is ordered to overseas bank. I mean, payment order is to overseas bank, and the physical draft has to be sent by post. So it's subject to delay and sometimes even lost in mail. This is how demand draft looks like. This is all issued by HSBC. Okay, the currency is foreign currency, Jap yen. All right. Next, we look at telegraphic transfer, or in short, we call it TT. Okay, it's much faster. Okay, basically it's a much faster and more efficient means for payment required urgently. The use of electronic means, especially usually telex. Commission and cable fees are payable. Customer usually basically instruct the bank to remit or TT the fund to beneficiary. And application for TT. Standing order is a periodic or regular payment to a particular person over a period of time. And the amount must be fixed. Take note, it has to be fixed, and the payment date has to be fixed each day, each month, right? So it's a fixed instruction. Okay, the date amount is fixed, the date payment is fixed, and the account is debit directly, and fund is remitted to the other party. Next, we look at interbank gyro. Gyro is a domestic electronic clearing system, and it allows for irregular amount and charge on different dates. So basically, it's in short, flexible. Customer that signs the gyro form authorizing the amount to be debited, okay, by the billing organization. It's a 24/7, so it's 24 hours available, 24 hours, 7 days a week. So basically, all year round. So it's seamless, simple, and safe. This is how the Nets pay. So it's download the app, register and digitalize the Nets bank card into the app. After that, you make payment by scanning QR code or tap on the Nets terminal. This is how it looks like for the Nets Pay. Okay, this is how it looks like. Scan to PayLah. So basically, first you tap the scan. Okay, scan QR code icon. You scan the QR code, and basically you have done. Just make the payment. Next, we look at OCBC Pay Anyone. This is also a mobile wallet app similar to DBS PayLah. It supports PayNow also. Basically, take note, PayNow is a platform. Okay, then when you come to OCBC, all the banks have their own app. Okay, and all of them give a different name to it. Okay, but the system, all the 9 banks use the same system, PayNow. The differences is between OCBC and DBS PayLah. Okay, OCBC Pay Anyone and DBS PayLah. Okay, OCBC targets OCBC customer only, whereas DBS target any bank customers. And OCBC can link NIC, handphone number, email, or Facebook. For DBS PayLah, only the NIC and or handphone, these two. You can see this OCBC Pay Anyone. So basically, you can scan the QR code on the Nets terminal. Okay, authenticate with the thumbprint. Then choose the bank account you want to pay and click Pay Now. And the transaction, once successful, you show this message. Okay, for Apple Pay, you can add a card in this manner. You first choose the card you add, then key in the details and the CVV. Later you do a verification code via SMS. Next, we look at Google Pay. Same thing, you look at how to add a card in. Then choose the card that you have. Then verify the card. Consumer Credit Services. Under NMS Notice 635, it requires a minimum income. It has a minimum income requirement of 20,000 for unsecured loans. Overdraft facilities, in short, we call it OD. It offers on credit a current account, not credit account, current account up to an agreed limit. It is flexible and convenient, especially for unexpected expenditure at any time, any amount, as long as within the limit. The interest is calculated daily on the outstanding balance at the end of the day. Rates are pegged to prime rate. It can be secure or unsecured OD. Unsecured basically just means clean. I mean, in other words, for it is clean for unsecured. Next, we look at revolving credit lines. It's similar to overdraft, credit extended. It's a daily interest computed on the amount owed. It's personal loans. I mean, our personal loans. Uh, it has a minimum income requirement of 20,000. No collateral is required, but may ask for a guarantor. Renovation loan. It has a minimum income requirement of 24,000 per annum. Maximum loan amount will be up to a maximum of 30,000 or 6 times of the money income, whichever is lower. Housing loan is a secured term loan for purchase of residential properties. It requires down payment, basically how much you are paying in cash and from CPF savings. The loan to value, in short, is LTV, is financing percentage of the housing loan. It basically means the financing percentage of the housing loan amount. So the maximum limit for the monthly housing loan repayment will be 60% times monthly income minus other monthly loan repayment. So 0.6 times 4K minus 600 minus 700. You will get out the answer is maximum limit is 1.1K.